Welcome back everyone to another YouTube video. Your boy is back and we are back to cooking. In my last video, I talked to you about Amazon stock and how I was considering buying Leaps on Amazon, which is a 1 year plus call option contract. I actually bought those Leaps. I called that in my Discord and I ended up buying two calls at $2.95 strike price that expire in June of 2026. Now, of course, we are in October of 2025, so this is not quite 1 year into the future, but it is still considered a leaps because it's a long-term call option. Now, as you can see, I'm already up 12% on this contract. If you look at when I bought it, it's actually 20 hours ago, so just this morning I bought this contract. I had two of them filled at 605, so $605 per contract. Excuse me. Um, But yeah, I mean, Amazon is a great pickup. I called it in the last video. If you look at the chart here, Amazon has been lagging the market. So I'll show you guys right now what I'm talking about. So if you look at the year to date, Amazon hasn't not really moved much, since the beginning of the year all the way to right now. It's been pretty stagnant. It went down all the way during April during that tariff scare, and it came back up, but it hasn't quite made its jump. We are in the AI boom. All of these companies are going to start making a whole lot of money over the next few years, and Amazon is going to play a big part of that. I think everybody understands the significance that Amazon plays all within all of our lives. Everybody and their moms has Amazon and they use Amazon. And I don't know about you guys, but my family uses Amazon all the time. And I know my neighbors do because I see the Amazon drivers there every single day. Anyway, so if we look at the 1 year, let's look at the year to date. On the RSI, it's just about break even right now. But I think Amazon, with its new AWS earnings, Amazon is doing a lot of stuff within the AI sector. And if we saw that big AMD OpenAI deal, that's just the beginning. It is literally just the tip of the iceberg of what this market is about to do with AI boom. These massive companies are going to spend tens of billions of dollars on chips, and you're going to see them use AI to their max capabilities and make a whole lot of money over the next year or so. So that's why, and honestly, like, it doesn't get safer than Amazon. Why am I playing Amazon and why am I so confident? Because it's Amazon. It does not get safer than this stock. So I already bought two 295 call options. I'm going to show you guys what to look for when you're buying a call option here, specifically a Leaps call option, which is 1 year, a Leaps play. Usually you want to look for 365 days. For my specific contract, I chose June because I think that's plenty of time for the stock to go up enough where I can either take profits or just let it sit until June and see what happens. Maybe I can exercise it for some stock. Probably not. Um, but Amazon right now, you want to buy 100 shares. It's going to cost you about 22,500 bucks. But if you want to buy a Leaps contract, say like this Leaps contract, it's going to cost you about 1,200 bucks right now per contract, and your delta is at about 0.33. Now, what does that mean? Your delta is basically telling you that you're getting paid $33 for every dollar that Amazon moves. But this is 1/20th of the price. You know what I mean? So you're getting a third of the movement for 1/20th of the price. That's a deal and a half right there. And you have plenty of 252 days for Amazon to go up in value. And with the new like AI bubble right now that we're sitting in, I don't think we're anywhere near to the point where this is going to pop. I think this is just the beginning. And in my opinion, we are going to see Amazon move all throughout next year, if not 260 by the end of this year. So this is a great strategy for right now. Of course, not everybody has $1,200, but I would recommend that you start understanding, you start learning about the powers that Leaps can bring you, because they can really grow your account really fast. This $1,200 can turn into $5,000 in no time. Remember, every dollar that this moves, you get $33. You get, yeah, $33 because remember, a contract here, a call option, you're owning 100 shares. So even though it's 0.33, 100 shares times 100, you're getting 33 bucks every dollar that it goes up. Yeah, and what's cool about the delta is the longer, the higher that Amazon goes up. If it goes up, say, to $230, this delta might go from 0.33 to 0.4 to 0.5. And now instead of making $33 per dollar that Amazon moves, you're now making $50, you know, so it keeps going up in value if the bet that you made, which is that it's going to go up, starts going your way, right? And I'll show you that with my AMD share, my AMD contract right now. So let's go ahead and take a look at AMD. Big day today for AMD. Massive day. This company is going to keep moving. Wow, $24 during the day and another $3 overnight. We're going to see AMD at 250 and break 300 in no time. This could be another great option. However, I will let you know now, AMD is a lot higher than the Bollinger Band, and it is very, very, very inflated right now. Obviously, there's a lot of hype, and I think that it will go up to $300, but it's very inflated. The call options are going to be very expensive. So just be aware of stocks like that when they go up in value like this. I mean, you look at last week, we're up 50%. Be very aware, okay? You would rather have an Amazon where it's been pretty stagnant and it hasn't quite hit that jump yet. But if you look at my AMD contracts, when I first bought these, the delta was at about like 0.6, 0.7. But if you look at the delta now, it's at about 0.97. That means every dollar that it moves, I'm getting paid 97 bucks for each contract. Very powerful strategy. Another thing that I wanted to go over today was SoFi Technologies. Now, my main strategies as a options trader here are buying leaps and selling cash secured puts, right? What is a cash secured put, you might ask? So let's go ahead and check this out. A cash secured put is when you are selling a put. And usually I like to go for about a month out, so 29 days. This is expiring November 29th. And here we look for something that is around 0.3 delta. Now, the higher the delta over here, the more risky you're playing it. So if you look at this, say this contract, I like to shoot for about a 0.3. That means you have a 70% chance of making your money. If the higher you go, the more likely you are to pick up the shares. So how does a cash secured put work? So basically, you are putting down $2,600, right? You're saying if the stock goes down to $26 from 28, then I will buy 100 shares at 26. Someone is going to buy this contract from you for 160 for 1.6 dollars, but since it's 100 shares, it's 160 bucks, right? Maybe this will make it a little bit easier, right? Somebody's buying this contract from you for 160 bucks, which means that your break even price is $24.40. So if this company drops $4.40 or $3.60 rather, well, you're going to have to pick up 100 shares. Okay. But what's cool about SoFi is it is a very powerful company. They are up and coming. It is a banking type of, it's like a tech kind of like Robinhood, where they are an online digital bank and they are starting to join the game just like Robinhood, where you can trade options. And more recently, they included options, which is going to be a game changer for this company. This company is really going to grow and there's a lot of confidence behind it, and the market loves this stock. Okay. So if you look at it right here, you're getting paid $160 and you're gonna have to put up 2,440 bucks. Realistically, it's a $26 strike price. So if you look at it right here, let's say 160, right, divided by 2,600. You're getting paid 6.1% in that 1 month where you own this contract, or will you sell this contract, right? So when you sell this contract, you're getting paid 6% in 1 month. Remember, we're multiplying it by 100 to get the percentage, right? And this is a great strategy for playing it safe. And I want to make sure that you guys understand that there is a big chance that if SoFi does drop down a little bit, something happens in the market, a war starts, there's a little bit of a scare, you might have to pick up 100 shares of SoFi and you have to put down that 2,440 bucks. But you're getting paid $160 to do it. And there's a good chance that SoFi just keeps running. And if you look at over here, 24.40, if it's at expiration, you're gonna have to buy the shares. But if it's at anything over, you get to keep your money. Anything over $26, you get to keep your money. Anything over 24.40, you're gonna keep that full 160 bucks. So you're gonna get that 6% return within 1 month. And honestly, that is amazing. You know, most people they look for 8% return in a year, and they're happy with that. we're looking at 6% per month, which is crazy if you think about it. 6 times 12, that's 72% in 1 year. Say you only play SoFi every month. So yeah, this is a great strategy to grow your account a little bit safer than Leaps, I would say. Leaps are more of like a long-term bet that you believe this is going to go up. But what's cool about selling puts versus buying a Leap is that the delta actually works in your favor. What this means is that the longer that as time goes by, the delta actually starts working in your favor because you're selling the put instead of buying it. So that means that basically, like the person who owns the contract, they're going to be losing money if it's not going down closer to that break-even price. Yeah, so I just wanted to go over the two main strategies that I use, which is cash secured puts and buying Leaps. I think they're both amazing strategies for growing your account. Obviously, Leaps have a different, they have more of an edge as far as it goes to double your account, double your money. Whereas SoFi, sorry, not SoFi, but as selling cash secured puts, you're getting a good return on your money every month, 6 to 8%, or 3 to 6% really is what we shoot for. But SoFi is just it's offering a great opportunity right now because of all the volatility. Um, so if you're looking for a safer way to trade, you could do this. And I'll show you now. My SoFi position is actually, if we load here, I have 400 shares of SoFi at $14.15. The reason that I have 400 exactly is because I sold some cash secured puts. They went down to the strike price. I picked up the 100 shares times 4 because 4 different contracts. And would you look at it now? A couple months later, I'm up almost 100% of my money. So, of course, like you got to understand that if you are confident in this company and you are willing to buy the shares, this is just a way that you can buy it $4 cheaper, a couple bucks cheaper. And if it does go down, well, you got paid to buy it cheaper. And if it does go up, well, you're getting paid the premium. So it's like a win-win. Whereas a Leaps, it has to go up. There's no loss. There's no win-win on both sides. If it goes up, you make a lot of money. If it goes down, you might lose all that money. So I really want you guys to understand the risk that comes with trading options and the different strategies that you can use depending on your risk tolerance. But yeah, I think maybe a good mixture would be like 10% of your account or 20% of your account in Leaps and the other 80% selling cash secured puts for premium. This is a way that you can make monthly income if you want passive income in a month. This is a great way to do it. I mean, 6% per month on your money, that's amazing. And also, like, if you end up picking up the shares, you might catch a banger and it might go up 100% within a couple months. So, like, if you look at this, I'll show you guys some of my SoFi trades, some of my history. All I do is I sell puts on SoFi, and then if it goes up to a value that I like, I just buy it back. So what's cool is if it goes up, say it goes up 70% of the value in 10 days, right? You have a 30-day contract, but say it goes up 30% or 70% of the value in 10 days. You can buy your contract back and just take the cash. You don't have to sit for the full 30 days. So instead of making 6% in 1 month, you can make 8 to 10% just reselling the same or reselling puts on the same stock. So that's what I'm saying. It's a very powerful strategy. And as you can see here, I got in my, where is it? I got my puts assigned in March, so a little bit before the tariff scare. And I ended up getting 400 shares of a great company. And I'm happy to own them and I'm happy to buy more. And this is another option that I have right now where if we see the market go down at all, I'm going to start selling puts on SoFi because they pay good. First of all, 6% right now. And we're talking about a SoFi that's pretty elevated. When you're selling puts, you usually want to do it when the stock is down. So if we look at the 3 months chart, remember to do your technical analysis before you sell a cash secured put. If you look at the 3 months chart, it's pretty elevated right now at 59. Usually you want it under 50, right? Like, so this would have been a great time to sell a put. So if you look at it here, it was at $26. You want it under the Bollinger Band. You want it somewhere over here. But we're getting it. Our break even is at about 24.40, so it's under the Bollinger Band. So what does that tell you? Even though it's fairly high right now, it's above the middle line of the Bollinger Band curve. You're still able to get it at a good price. So I think this is a fair trade for SoFi. I think you can make some good money while also playing it safe. All right, guys. I hope you got some value out of what I talked to you about today. Remember, Leaps and cash secured puts, my two main strategies. Yeah, I have a free Discord in the bio down below. Make sure to join it if you want a community of people who are also doing the same thing you are, and we can all grow together. Make sure to like, subscribe, and I'll see you in the next one.